So good morning, good morning, good morning. Today is September 4th, 10 o'clock here. Jumping on, of course, we talked about it yesterday. We had that news at 10 o'clock here. The big news is going to be the job openings report. As you can see, we've got this huge red candle here on the way down. Let me take a look at what the results were. So, jobs right there. Consensus. The forecast was 3.1 million. It came in at 3.277. So a little bit worse than expected here. Again, as you can see, the market overreacting. We were on a nice little uptrend here. And then, of course, now you can see the 9 starting to cross underneath the 20. Big pullback here. So potentially we can look for shorts. Problem is we're gonna have a little bit too much volatility here. It did just get rejected off that 9, but I'm gonna wait, kind of see what the market does here before I try to play this craziness. I'm gonna jump in here with a tight stop loss. So we're gonna get stopped out here. Again, we gotta let the market calm down a little bit. I was looking for a quick little scalp there, but as you can see, the market's gonna be all over the place here for a minute. Just off that volatility, the news that we had at 10. Looking to go short here. Take profit's going to be down here.
Order filled.
All right, going to add to the short here.
Order filled.
So big pop here. We'll add here at top of the market. A lot of volatility.
Order filled. Order filled.
So 5 contracts in here to the short side. Looking for that big upper shadow that we're starting to get here. Looking for that nice little pullback. So looking for the market to pull back here, at least down to this 20 moving average. I want to see how it reacts off of it. If we get a bounce off the 20, I'm probably going to close this out for a loss. But if we get the break of the 20 moving average, we should get paid out. So we've got room to fall to that volume weighted average price here. So there's the 9 moving average. I want to see this fall to the 20 here. Nice red candle here showing some selling pressure coming in. So let's watch this 20 moving average here. That's going to be the key as we come down here and test it. And it's right where my break even is as well. So if it looks like it's going to hold that 20 moving average, we may get out because I can minimize the loss here. So, oh, there we go. There's the break I'm looking for. Oh, big lower shadow. Got filled. Oh, man. It came so close to filling me all down here. Come on, give me that break here. Come on, keep on coming. Oh, come on.
Order filled.
There we go. Starting to get filled down here. I'm going to close that out
Filled.
just because we're testing that VWAP there. So we're going to walk away $862.50 of profit on that one. Did have to hold that one for a minute as we got that crazy push up here. And then there's that VWAP touch. You can see it right here on this SPY chart. That's why I closed it out right there, because I figured we might get a little lower shadow off there. Might as well take the profit as it's there. So that one was a little crazy. Had to play the volatility on that one. Kind of, we had a decent size position there, 5 contracts. We had to wait for that pullback underneath that 20 moving average there to get filled. And it came right down to that volume weighted average price there on the SPY, that 55146 area. So I went ahead and closed it out, and that was the target. We'll kind of see where we go from here, but these are the type of days it can be a little hard to trade, with the big news releases here, because as you can see, right, as soon as the news dropped at 10 o'clock, you had this big, massive red candle here, followed by these 2 green candles right back up, right back down, right back up, right back down. So market gets a little choppy on days like this. Now, yesterday we had a news event as well. It's that news event, the ISM manufacturing data, not as heavy weighted in the market as the jobs report, because the jobs report is a key indicator of, a key data source for the Fed to determine, what they want to do with the money supply as well as interest rates. If the job market gets too hot, they try to slow it down, because if the job market's too hot, that causes inflation. So they use it as a key data point to kind of figure out where the economy's at. That's why you saw when, kind of coming out of COVID, when interest or inflation was kind of running out of control, and then the Fed started raising interest rate, started slowing down, or started doing quantitative tightening. That's why you saw the layoffs, especially in like big tech, which is, high salary individuals. You saw almost all big tech lay off across 2023, or late 2022, all into 2023. 2024 starting to pick back up though. So 862.50 here in profits. Again, we had a small little loss earlier this morning, small little $175 loss. That was a nice $1,000 trade there to get us to 862.50 here on the day. Had to take a little bit of risk here with that volatility. Again, had to jump in here, 5 contracts to the short side. Look for that nice little pullback. So 816 here, market's going to hopefully here start to calm down so we can have a little bit more stable plays here. So we'll sit back, we'll be patient, we'll look for the next opportunity here in the market. Market Chop Fest City right now. As you can see, we are up, down, up, down, up, down, up, down, not respecting any of the support and resistance lines here. So again, we'll just sit back, we'll be patient again. Kind of to be expected on a bigger news event today. Again, just be careful out there because it's going to be all over the place. We also have big news coming out tomorrow. The ISM Services PMI comes out tomorrow as well. certainly looks like we got a lot of that volume and volatility out of the market here. So maybe actually have some place here on the day. And as I say that, we have a break here. But as long as we kind of hold the VWAP, we are still kind of on the bullish side of things. Just don't know if it's worth pulling the trigger on anything just because of how volatile the market is. Again, we were able to take advantage of some of that volatility earlier here. We're up 862.50 on the day after commissions 848. As you can see, big pullback there, right to that VWAP area, right to that 551.52 area. Just check a couple other stocks here. NVIDIA at 107, Amazon here up to 175.
Order filled.
Let's take a stab here on the long side. Add all the way down to the VWAP here if it pulls back.
Order filled.
There we go. We're going to get filled there for 275 in profit. What's a profit here on the day? 1,137.50 here on the day. Oh man, couldn't have got a better fill. Look at that, right up. Right up there to that pullback area. We've got some room to run here in the market to the upside here. On the ES, we got room to run at 5,571.60.
Got all our judges there, right?
So still looking for opportunities here in the market. And the market's got room to run here. here for some pullback entries. Oh, it's not going to fill me there off the 9. Order's right there. Oh, it's going to one tick me for a no fill there. Maybe it'll come down and fill me. So after commissions here, we're up $1,121 here, 10:30 in the market. Not bad for 30 minutes of work so far. Good. We'll see what else that we got here. Be patient with the market. Market finally has stabilized after all that craziness this morning with that news dropping at 10 o'clock. Again, we talked about it yesterday. We knew that news was going to drop at 10. That's why I jumped in a little bit later here because I typically don't take a trade before news drops. Well, I say typically, almost never when it comes to news like that because you just don't know what to expect. This market's way too unpredictable. We also have news dropping tomorrow. It's not going to be as strong as it was today, but it will have a volatility impact on the market at 10 o'clock as well. And just like we had the ISM manufacturing report that comes out, this is going to be the service-based report. So, first week of every month, we typically do have a bunch of news that drops. So again, like I said, market's got room to run to the upside here. 55.71 here is going to be the target toward the upside. Like I said, we're sitting at 55.4950 here. Again, I want to see a pretty decent pullback here before I try to pull the trigger to the long side. A little bit I don't want to say overextended, but a little bit higher than I would on the RSI to be looking for longs right now. We're about 59, 58. Typically like to see that in the 50 range or below before I pull the trigger, as that gives us the best risk versus reward. Now that the market's finally calmed down, we don't have all this crazy volatility. The market's actually fallen somewhat of a pattern here. Again, you can always take advantage of that volatility. You just have to be smart about it. Again, you got to be risk tolerant, right? So you saw that position size that I was in. We were probably down about $2,000 at one point on the short. But once we got that nice little pullback there, we were easily able to go up, 1,000 plus and just close it out. Got to be very, very careful on those trades. Even me there, if it would have busted through the high of the day that's where I had most of the shorts at, to add to it, if it would have busted through that, I could have put myself in a pretty bad position. You know, we could have been down 3,000, 4,000 before we know it. Then we would have had to close that position out and took a pretty decent L on the day here. But had a pretty decent idea that we would come up toward the high of the days, start to give a little bit back. Then we got that nice little volatility flush to the downside and was able to close it out right off that VWAP touch. Again, going a little bit against the strategy there, but I've seen, you know, that trade comes all from experience from being in the markets, you know, trading slowly, you know, solely the ES for, you know, the past 2 to 3 years here, and seeing every, you know, the first week of every month you see those jobs reports come out, the ISM service goods, manufacturing goods. After seeing how the market reacts to them for so long, you know, that's more of an experience play because, you know, if you kind of look at how I took it, it kind of went against the strategy a little bit where the 9 was above the 20, but I'm looking to short when the market's telling me it's bullish. But again, I've got had a pretty good indication that, you know, we were going to get that volatility dump because that's what it likes to do. You know, you go back and look at it from the morning market there, right? You had that 10 o'clock big dump there. You never know where that's going to go. Don't ever, like I said, that's why I always tell you guys, like before 10 o'clock, if news is dropping, just you want to be out of your position. I mean, unless you want to have one contract in here, keep a tight stop loss and play like a lotto play. I mean, I don't. I mean, that's up to you guys. I mean, I don't play that game, but I know traders do. Like, you know, you'd be like, oh well, you know, we're a little overextended here. I'll go short here at 9.59 with the stop loss right here at the highs. If it hits, it hits. You know, but you could have got lucky if you went short there. You know, you would have had that big drop. You could have made $3, $4, $5, $600 there, but I recommend against that. You know, you might as well go to the casino and put it on red or black at that point. You know, but then you had that big recovery there off that 200 moving average. You know, but it doesn't respect the 9 and 20 on this type of plays. You know, typically 15, 20 minutes after that news drop until we kind of settle down like we are now, and the market actually picks a direction. Because these are all algorithms, right? It's like playing chess against a computer. You know, you have a big drop, big pop, big drop, big pop, drop, pop, drop, and then now we've kind of settled down into a nice little upward trend. And again, we've got room to run here up to that 5571 area, which was support yesterday. So old support's going to turn into new resistance. But looking for this to drop, like I said, RSI now into the 62s. I want to see this drop, you know, almost the exact opposite of what we saw yesterday of how we played it. I want to see this actually drop below the 20 moving average here. And then I want to build up a position. And then if we crack back above the 20 and 9 moving average, then I'll go long. But right now, if you're trying to play off the 9 and 20, it may work. But the risk versus reward is just not there for me, just because the RSI is a little bit high into the 60s. I want to see it kind of settle down, give back a little bit, get the 9 and the 20 moving averages a little bit closer. As long as the 9 stays above the 20, we dip down a little bit below the 20 moving average here. We start to break back above it. We can add into a position and then look to follow the uptrend here. And then, of course, always, you know, if the 9 crosses back below the 20, we can always look for shorting opportunities. But that's what I'm on the lookout for here. That'll be my last trade if I can get the setup that I'm looking for here. But regardless, I'm up $1,121 on the day. Not a bad day here, especially on some wild volatility type news. You know, before commissions, $1,137.50. After commissions, $1,121. kind of
While the
listen
Federal
here.
Reserve is more confident that inflation is slowing to its target, the central bank is still keeping an eye on the risk of further weakening in labor market conditions. The upcoming employment report this week will be the last one before the Fed's interest rate decision at its September meeting. And Citi is projecting that August jobs report could be soft enough for a 50 basis point rate cut from the Fed. For more on this, we've got the guy behind that call, Citi Chief U.S. Economist Andrew Hollenhorst. Thanks for being here, Andrew.
Yeah, my pleasure.
It. So it is really interesting here that we have now seen all the attention shift to jobs from inflation. And we've heard a lot of interpretations of the July jobs data that maybe there were things that were pushing it around, lower weather, for example, that mean that September's going to be better. But I guess you're not entirely a buyer of that opinion.
I'm not in that camp, and it has been a very quick shift away from inflation and towards the labor market. And I think it's appropriate because we do see the inflation data coming in softer, slower, and we see the labor market where we have a number of signs of softening. It wasn't just that July jobs report. Now, on the July jobs report itself, and now we're looking to where the August number is going to come out on Friday, I am skeptical of these stories about weather effects and temporary layoffs.
How come, Andrew? Why the
It's really reminiscent of what we did with inflation. Remember when we talked about transitory inflation and it was just used cars, and every month there was a new story for why you shouldn't take it seriously. And this feels a lot like that because the unemployment rate didn't just move up in July. It's been moving up for the better part of 6 months or longer now, and it's been consistently moving up in each of the last 4 employment reports. So wherever the number comes out on Friday, in any given month, right, we can have factors that shift things around. Wherever the number comes out on Friday, we still have a range of data that tell us that this is a labor market that's weakening. So, yeah, not a big buyer of the weather effect story. You can ask the Bureau of Labor Statistics that puts this data together, and they did put a note in that data release saying no discernible effect of Hurricane Beryl. So you're really kind of, saying that the Bureau of Labor Statistics isn't putting these numbers together correctly if you're saying there's a weather effect.
So Andrew, bottom line, what are you expecting on Friday? What do you think we see?
So we think we're going to see a continuation of the trends. And what the trends have been is a slowdown in payrolls employment, the establishment survey. So the number of jobs created, we think will come in 125,000, so similar to where it came in last month, which was a big slowdown from where we had been. On the unemployment rate, we're at 4.25%, and it rounds up to 4.3. We think we're going to get another 4.3, but it's really going to be pivotal for the Fed where exactly that number comes in.
And just to be clear, your 125,000 is about 40,000 below
Jobs that are created, and we're above consensus. There's some 4.2s, there's some 4.3s, but the consensus is for 4.2% unemployment rate, which I think is what you were talking about, where people expect that some of these weather effects will come out and bring that down.
So I guess how would you characterize the job market right now? And do you think that broadly the market and your economics peers perhaps are in denial about the state of the job market?
So the problem isn't really where the job market is right now. 4.3% unemployment rate is not too high, and job growth until very recently has been pretty robust. It's really where it's going, and we see that in a number of signals, and we're going to get one of those reports out this week. We get the JOLTS report this week also, and the JOLTS report gives us the hiring rate, and that's really interesting because what we've seen in this job market is not that layoffs have picked up a lot, but we've seen the hiring rate that's been declining and declining and declining. And if you looked at that ISM manufacturing report that came out this morning, we had firms in that report saying our labor costs are high. How do we economize on labor costs? By hiring at a slower rate, by instituting hiring freezes. So it's a strange job market where it was really hard to hire people not that long ago. So I think a lot of firms out there are not in a hurry to start laying people off, but we do see them hiring at a slower rate. And that's the first step of a broader weakening. Eventually probably does turn into layoffs, but we haven't seen that in the data yet.
So given your view of where the labor market is and where it's headed, Andrew, you think that gives the Fed room to cut by that supersized 50?
So I think they have room to cut 50 for 3 reasons. One, because the labor market is loosening, and that would be the appropriate thing to do to counteract that, but also because inflation has slowed, and because the level of policy rates is up above 5%. And we heard that from Chair Powell at Jackson Hole, where he said there's ample room to adjust policy. And what he means by that is policy rates are high, they can come down, and now there's a reason to bring them down.
So if there is a half-point cut, does that sort of give the little jolt perhaps that the economy needs, and or conversely bring us down to a more normal rate quickly enough? Does that do the job, and then they can kind of go quarter point from here?
Yeah, they may get back there. That's the ideal situation. That's what they would be trying to achieve. Unfortunately, the lesson of history is once you realize you need to do that 50 basis point cut, usually you really should have been doing that 50 basis point cut earlier. And remember that jobs report for July came out just after the FOMC meeting. So if the Fed had known...
So we might get the setup here. I'm watching this here. I'm looking for this setup. This will be my last trade of the day. If I can snag what I'm looking for here. So we're getting what, $1,121 here on the day after commissions. I got that video from yesterday. I'll upload that here today. And then I'll get this video uploaded as well. So let's see if we can get what we want here. Again, looking for the setup here. There's that little break of the 20 moving average here. This is kind of what we want to see. This puts the RSI into the 47s here. Big key is we got to re-break that non-moving average here and establish an upward trend. So very typical here. We'll get rejected off the 9. And then what'll happen typically is we'll trade in between this 20 and 9 moving average. You'll start to get see the 9 and the 20 get real close here, like almost touching. And then either we'll break above the 9 moving average. If that happens, we're going back long. If we see the 9 get back below the 20 and get rejected, then we're going short. So again, this is the setup we're looking for. RSI right in the 50s, right where we want it. 9 and the 20 starting to get close. We'll see which way this breaks, and we'll play it accordingly here. Again, it's all about the close. We want to see the close of the candle to determine direction. Like I said, just because it broke the 9 moving average here doesn't mean I'm automatically going long. I want to see it close above it. And then same thing on the short. I'd like to see it close below it. Then I'll know which direction to go from there. But 1050 here. We'll probably get one trade here. This is starting to set up in the way that I like it here. So we'll probably get one trade and we'll be done for the day. Look to go long here. Got some limit orders here ready to go.
Order
Starting to get filled. 2 contracts here to the long side. Target's going to be up here toward the high of the day. So you see kind of what we talked about. We wanted to see that pullback underneath the 20 moving average. Wanted to see the retest, and then once we got that close above the 9, started to build my long position. Now we're just looking for this to continue on up, toward the high of the day there. Again, take profit where you feel comfortable. I'm looking for the push here toward high days. It'll give us an extra, what's that, 425 in profit. If we can hit both these profit targets, put us up right around $1,500 on the day. Not bad for an hour of work if we can snag this. Stop loss is going to be if it breaks below this little lower shadow here. So we've got a pretty decent risk versus reward on this. Again, I will add if it kind of breaks down here. You can see those limit orders ready to go, but we should get some type of pop up here. Again, it's 10:53 in the market. Almost got filled there. Had that second order right there on the 20 moving average, no fill there. The only thing I hate about going long is I feel like it takes forever for the market to hit your profit targets on the long side. Anytime I short, I swear those shorts come right down to where I want them. I can take profit faster, but again, it's stairs on the way up, elevator on the way down typically. So again, profit targets up here, just being patient with this position, looking to capitalize on this last little trade of the day here. Again, 9:45 to 11 o'clock is my trading hours. And I am done, and I will go enjoy the rest of my day. We have beautiful weather here, so for me, probably either hopping on the motorcycle or the boat and taking it out. Trading is definitely a rough life. So again, we talked about this setup kind of before this setup happened and what we were looking for here. Right now, we're just being patient, sitting on the hands, looking for it to run up here toward our profit target. Try to snag this last little profit and get out of here with another, with a $425 win, and we'll call it a day here. But market really slows down toward that 11 o'clock hour. That's typically why I'm out of the market at 11. Just because the volatility and the volume slows way down here. But let's see if we get this last little push here. Right into that profit target is what we're looking for. Again, we talked about this trade, how we wanted to see it to develop. All we had to do was execute the plan here.
Order filled.
There's the first profit target hit. And then the second one right there. Come on, baby. We're right there. And one tick away on that 262.50 profit there. Still going to sit on my hands here, see if we can't get that last little push here, last little tick, get us filled, get us out of here.
Order filled.
And that is it. So that is going to be the trading day today. Again, nice little trade setup here. We talked about it again. Biggest thing in trading is waiting for your setup to happen, waiting for it to come to you, to happen exactly the way I said it, just like yesterday, right? We were looking for that pullback underneath the 20 moving average to make our decision whether we're going to go long or short here. And what we were looking for when that happened, got that pullback, got the RSI back down to the 50s, kind of came into here. If we got it back above the 9 moving average, which we did close right there above it, I was going long. Profit target was going to be toward the high of the day. So, built in 2 contracts, let it push, add another 425 here on the day. It's going to put our profit here $1,541 after commissions. Before commissions, profit was $1,562.50 here. So about $20 or so in commissions. That's going to happen. You're going to have to pay the fees to play the game here. So not bad. Like I said, $1,541 after commissions. Not a bad way to spend first hour of my day here. And I'm going to go enjoy the rest of my day. So hopefully you guys made a little bit of money. Like I said, a pretty crazy day with the JOLTS report. But we talked about it yesterday. We have a lot of news that comes out the first week of the market. That's why I always say, it's one of the reasons I didn't come on before 10 o'clock because I'm not taking any trades before then. But, we talked about it yesterday. For me, I just don't play that, gambling game, right? No positions before 10. Let the market do its craziness here. Let it go back and forth. We played a little bit of the volatility here. That was the bulk of our profit. About $800 right there in profit from playing that. A couple little trades into here, and then that little trade there. Again, it's going to give us 1541 on the day. But these trades, when the market's real volatile like that, again, not for the faint of heart if you're a newer trader. But I am going to take it just because I've seen how the market reacts to them 1,000 times, so I feel confident jumping in and jumping out there. But these are really the bread and butter trades. Once that volatility calms down, and we kind of find that trend of which way the market wants to go, that's really what newer traders should be playing, and that's the bulk of my trades as well. Let the market tell you which direction it wants to go. Have your strategy, have your setup, just play it that way. Just execute on your trades. That's really what it comes down to. So again, 1,541 here on the day. Let me make sure I recorded this. I got the video ready to go from yesterday. I'll get that uploaded. Let me make sure this is recorded. Yep. This will be recorded today. I'll get them uploaded to YouTube. Like I said, I know I've been slacking on that for like the last 2 years or so, but I'll get them uploaded for you guys. But that's it for me. You guys have a good one. Hopefully you made some money. That's going to be it for me here. 10:58 here in the market. I'm going to call it a day. 1,541 in profit. Peace.